On today's episode of the Cryptoverse, Bitcoin adoption is growing at the rate of 1.1 million new wallets every quarter. Dash is the privacy-focused digital currency that offers transactions with instant confirmations. Its unique, decentralized decision-making and self-funding system make it an ideal choice as a stable and secure digital cash. Click the link in the video description to learn more. Hi there guys, and welcome to the latest episode of the Cryptoverse, your regular dose of news and commentary on Bitcoin, cryptocurrencies, and blockchains. I am your host, Chris Coney. So let's begin with the market roundup. So we turn to coinmarketcap.com for the market roundup. Let's look at the biggest gainer and the biggest loser of the day. Now today's Monday, so this is we've missed the weekend, but we can look at from Sunday to Monday. The biggest winner today is Ethereum Classic, having gained 10.27% on the day, putting an Ethereum Classic token at $1.14, and $2 million worth of Ethereum Classic has been traded. And Ethereum Classic's token symbol is ETC. Looking at the coin market cap overall trend there, it's kind of up over the longer term. Biggest loser of the day is Waves, down 7.88%, putting a Waves token at 22 cents, but only $31,000 worth of trading volume. And in terms of the trend, it's kind of all over the place. It's up and down, up and down, up and down, so can't really call it on that one. If I had to call it, it would be gradually down trend on the old Waves. So there we go. Waves is, I've had a look at it. It's not fully launched yet. I downloaded the implementation of the wallet software, and it's a blockchain that's going to allow you to create your own blockchain-based assets very easily. And the software looks very nice, but it's not functional yet. You can click on a load of buttons, but it just basically says this is coming soon, this is coming soon, this is coming soon. So it's not very usable yet. So I've put it down again until they've developed it a bit further. And of course, Ethereum Classic is a fork of Ethereum, which is the world's decentralized supercomputer where you can build apps and then run them on the Ethereum supercomputer. So there we go. Right, let's take a look at the Bitcoin chart now. So looking at the Bitcoin chart then, my kind of prediction is playing out here. You can see we have now broken that line I was talking about, which is $780. We broke that over the weekend. So the weekend was the 17th and the 18th, and then today's the 19th. And you can see on Saturday, well actually Friday, we broke above 780, and then that bar, well the candle closed above 780, and then Saturday the price continued to go up, and it held above that 780 mark. And then again on Sunday, this is I call this a low test bar. So the low price down here was rejected by the market, and there was enough buying power to push the price back up to the top of the range by the end of the day. And now we are trading, what's the high of today? 794, and right now Bitcoin's trading at 791. So our next target is to break 800, and then I have absolutely no idea what's going to happen after that, because there's no really stopping the price then, looking historically. In fact, I can show you. If I switch this to a weekly chart, you can see this right back here from 2013, all this craziness. I would ignore this because it's so crazy. You can't really rely on it as a technical analysis. The point being is that if it breaks this 800 point here, this is all clear air. So I've no idea where it will stop after it breaks 800. We would just have to rely on the round numbers like $900, $1,000, because they are psychologically significant. But other than that, it would just be a wait and see. In terms of the news today then, I've turned to bitcoin.com. This is a Joseph Young article from the 18th of December, and I've been off bitcoin.com for a little while now. It's just not from anything other than just coincidence, really. The bitcoin.com news hasn't been particularly tantalizing, so I haven't decided to cover any of their stories. But this is a good one. And a few sites have covered this, but this is the first one I came across, so I thought I'd go through it. And these articles are only sort of stimulation for me to get my own insights out anyway. So the article is Bitcoin gains 1.1 million plus new wallets every quarter, which is what, 300,000, more than 300,000 wallets a month. and that's based on this year's figures. So the article says, in 2016 so far, it's been a year of capital controls, war on cash, restriction of assets, and decline of gold, which most investors and traders believed to be the global safe haven asset for decades. Amongst rapidly devaluing currencies and assets, Bitcoin continuously demonstrated a strong performance in terms of adoption and market value, recording a consistent growth of over 1.1 million new wallets each 3 months since the beginning of the year. Now, the first thing I'll say here that this number is only really a best guess. We can say add up all the new Coinbase wallets, for example, and then add that to the number of times, say, the Jax wallet is downloaded and so on, to get an overall figure. But we can't count all of the paper wallets that are created with like bitaddress.org, for example. Now, that doesn't invalidate the 1.1 million figure because the vast majority of mainstream Bitcoin users will create a wallet using a service that can actually count the wallets. And remember, we can only really count wallets, not users. The Bitcoin network doesn't recognize personhood. It only recognizes Bitcoin wallets. And of course, a person can have any number of Bitcoin wallets. So then moving on here where it says increasing adoption, it says in 2016, the total number of Bitcoin wallets on blockchain.info grew from 5.3 million to 11 million, which is basically adding 5.7 million new Bitcoin wallets since January of this year. And that's what I mean. Blockchain.info can count the number of new wallets because they're hosting them for you. But let's reflect on those numbers for a second. Let's be very conservative and say that new Bitcoin users create 2 wallets each. That would mean that about 3 million people or new Bitcoin users have come into the ecosystem right there. And while that's a small number compared to the world's population, adding 3 million new people to the Bitcoin economy, well, that's a lot of new economic activity, assuming these people are regularly using Bitcoin, of course. But then we go on to where it says here, the rapid increase in global awareness and adoption of Bitcoin can be directly attributed to the market instability and economic struggle of most countries, including India, China, and the United States, among others. So I read that and I thought, well, imagine what it would be like if we didn't have Bitcoin and we kept reading these news stories about like the war on cash. I, for one, would not feel so optimistic, I can tell you right now. I mean, with no escape from that kind of tyranny, I'd be overcome with feelings of powerlessness and hopelessness. Now, whether Bitcoin can save us or not isn't as important as it giving me enough hope to keep me in the fight, if you know what I mean. Because if I give up the fight, it doesn't matter how fantastic Bitcoin is, without people with the will to fight, it's kind of useless. Anyway, there's a section here on capital controls being a factor. It says, as a result, Genesis Mining co-founder and CFO Marco Krohn told Bloomberg that he firmly believes the price of Bitcoin will increase by 100% next year, as the user base of digital currencies continue to grow and the demand for Bitcoin remains high in regions with heavy capital controls. Now, I don't know if you saw that episode of the Cryptoverse that I recorded at the Blockchain Money Conference in London a little while back, but that's when kind of Marco fell out of favor with me, to be honest. He was one of the speakers at the conference and he went significantly over his allotted time. Hi guys, it's Chris Coney here. I just need to interject something at this point in the Cryptoverse. When I was editing this, I actually realized I'd got the wrong Marco. The Marco in the article is the Chief Financial Officer, Marco Krohn. The Marco I was referring to is actually the CEO, Marco Streng. So it was Marco Streng that actually spoke at the Blockchain Money Conference, and he's the guy that fell out of favor with me, not the Marco Krohn who's in the article. So I just needed to add that correction before I put out this episode. And this was despite the MC going up to the front of the room, sitting in the front row, and holding up a sign saying "Time's up." And Marco acknowledged the sign, and then he continued to ramble on about his business. Now, I don't want to make this whole episode about Marco, but he violated a number of principles which kind of changed my view of him significantly. So there we go. And then just below that, we have an embedded tweet from Andreas Antonopoulos that says, a cashless society is a totalitarian society. Central database digital money puts everyone at the mercy of government who can turn anyone off. And underneath that, it says, if more individuals, investors, businesses, and traders continue to develop awareness towards excessive control of government on cash and assets, the demand for decentralized currencies like Bitcoin will rise even further, expanding the global user base. And that's exactly what I'm doing here. My personal mission statement is to lead people to freedom through education and awareness. And then this final section here talks about the mainstream media and how they predict Bitcoin's death and are always failing to predict it successfully. And it says CNBC and many other mainstream media outlets criticized the slow growth of Bitcoin in 2015, stating that Bitcoin would only have 5 million active users by 2019. Some consultants and analysts, including Windsor Holden, noted that Bitcoin will not be able to hold up with the competition within the financial industry. Now, this is somewhat of a possibility, I would say. I don't know if I'm just attuned to this because I'm involved in Bitcoin, but since I have been involved in Bitcoin, I've noticed a few leaps forward by the finance industry in the UK. So things like contactless payments, debit cards with these NFC chips. You just tap them on the retail point, and then it instantly pays for whatever it is. And then yesterday, I received a PayPal payment, and I transferred it to my bank account, and it arrived within 2 hours. So these new features seem oddly coincidental. They seem to oddly coincide with Bitcoin's increasing popularity. And I'm talking about these things because I'm thinking about someone who, say, lives in the UK who comes to Bitcoin for the first time. They're going to compare Bitcoin to their experience of instant payments with contactless cards and banking apps on their phone. And in the UK, they're fully featured. And then these 2-hour PayPal transfers that don't actually have any fees. So while we know that the old banking system is flawed, we know that it's flawed at the very base of the system. For the average user, that's just too of an abstract idea to affect them. It's just too ethereal. There's no real problem that they can see, touch, taste, and experience themselves that would get them to make the change, right? And that will just make Bitcoin to them seem lukewarm at best. So when people talk about a killer app for Bitcoin, it needs to be something that the legacy banking system just cannot ever hope to do. And it also needs to solve a big enough problem to get the average user's attention. And then we've also got Ripple doing their work, which will bring Bitcoin-like user experiences to the old banking system, giving the average user even less of an incentive to adopt Bitcoin. And this is why education about how money and the finance system works is so essential, and it's an essential prerequisite to people seeing Bitcoin's value. And of course, I've been talking here about developed countries with these advanced banking facilities. And when you take Bitcoin somewhere that doesn't have these banking facilities, well, Bitcoin becomes an out-of-the-box banking system with a ready-made infrastructure that brings a developing country up to the standard of a developed country in terms of banking in an instant. So while my preferred market in terms of a Bitcoin educator, my preferred market is non-Bitcoiners, because that group is bigger than Bitcoiners, Bitcoin itself has the most to gain from non-bankers, i.e. people that don't currently bank, right? And then the article finishes off by saying, Holden, like other analysts, emphasized that payment networks from tech giants like Apple and Samsung would ultimately surpass the growth of Bitcoin by appealing to the general public. However, similar to most mainstream media predictions and analysts from research firms, this has proven to be false. Now that's a good example. Apple Pay turns your phone into a payment device, and Samsung will do the same. So what I would say is please share with me in the comments below why you think Apple and Samsung will ultimately fail at this. I think the biggest reason they will fail is because people are increasingly wanting to use permissionless systems and systems that are not centrally controlled. I think people are waking up to that. And for Apple and Samsung, that's not really their business model. So while I've spoken about the average person in a developed country during this episode having these resistances to adopting Bitcoin, I do believe despite all that, if they're educated properly and given the awareness about the dangers of the old system and the benefits of these permissionless systems that aren't centrally controlled, I believe that will sway people to adopt cryptocurrencies. So thanks for joining me today, guys. If you liked this episode, hit the like button. If you disliked it, hit the dislike button. Please leave me a comment below with some feedback and get subscribed. And please support the Cryptoverse and boost cryptocurrency adoption by going to cryptoversity.com patreon.com/podcast and becoming a patron. From as little as $10 a month, you can secure Cryptoversity's future, get unlimited access to all Cryptoversity courses, and access a private patrons-only chat group where you get direct access to me. That's all for today, guys. I'll be back tomorrow with another episode of the Cryptoverse. So until then, it's me, Chris Coney, saying bye for now.